What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol EAR for Eargo Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talked about it last time when the probe from the Justice Department was released, and that obviously led to a massive gap down here. Now, on today's session, we had the reverse catalyst, and if we just pop this open, the investigation is no longer active. You can go through and read some of these articles. However, with the exact opposite catalyst, it's not like we actually gapped up to where the stock price was trading at, prior to around 22, which to me is fairly concerning. And the fact also, if I just zoom in a little bit here, we certainly did get a gap up. Don't get me wrong, there was some positive price action. However, we faded off, right? It's not like we just screamed higher after that gap. So to me, not really looking too promising here. What we're going to do is, of course, give ourselves that daily roadmap, just pointing out the most obvious areas of support and resistance, and we'll talk more nuance as we drill down to the 30. We're certainly well outside of this range. We're obviously up and over this area of resistance as well. The next major area of contention would be closer to about 920. That's the high end ever since we had that big gap down from the initial release of the investigation. And of course, 1060 would then start to fill the remainder of the overhead gap up towards 2143. And again, I'm not really seeing that as a likely scenario based on the type of candle that printed on today's session. Yes, sure, we can look at this lower wick a little bit in the sense that, yeah, there was some buying down at the lows, but overwhelmingly, again, it wasn't to the magnitude that you would have expected with this type of catalyst. So taking a look at the 30-minute intraday time frame, most of the damage was done on the early hour of the day. Boom, nice little sell-off there. How aggressive was it? Let's take out the fibs from the high all the way on down to the low, and what we'll notice is that for a majority of the day, so this chunk in here, certainly consolidating well underneath the 38.2. We did try to make a move back up and above, even getting into the 50% mark, but overwhelmingly could not make it up and over that wick there, closing again right kind of at the 38.2. So to me, this is all technically bear flag consolidation from a smaller time frame perspective. Getting something like this, ultimately looking for the breakdown of that 660 to fill the gap underneath us, as opposed to fill that massive overhead gap, which we talked about. So again, if this all of a sudden was going to be the name to be in, if this, cease to continue to investigate was a huge reason for people to get back into the stock, then why did it not make a more impressive move on today's session? That's ultimately the question I think you should be asking yourself. So you have some levels to watch out for. We have upside levels as well as downside levels. The chart does look bearish, so I will leave you off with that. If you enjoyed the video today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.